It is that time again. It is growth stock time. And what is it? It's April 26th here. It's time to talk about the best growth stocks for May. Last time we did this a month ago, I feel like the market was a little bit jittery. The bears were coming out. People were zipping up the bear suits, talking about growth going to zero. But where did they all go? That's my question of the day. You can start thinking about that. Leave me a comment or something about where you think the bears went, because they're not here anymore. Anyway, I digress. Let's go ahead and get into the best growth stocks for May. And the first one is Accenture. This is a really cool stock. I've known it for a while. These are a global professional services firm. They're big into digital, cloud, also security, and they have the dream team of players that they work with. Okay, so they work with Google, Amazon, Cisco, Microsoft, you name it. And there's a reason that this is one of the best growth stocks, is because you can see that their 1 year performance is up 65%. And then 3 years, stock is a doubler. We like doubles, guys. Doubles are really good. And then the most important thing that I'm looking for when I'm looking for a great growth stock is their big money going into the stock. And as you can see it, I mean, listen, this is, not the stairway to heaven per se, but it's the skip to heaven. So all I need to see is just green, green, green going up, up, up. And that's what makes this a great, great technology stock. They just continue to fire on all cylinders. 3 year sales growth rate is just over 6.5%. Their earnings growth rate over the same time period is averaging 13.1%. And they give you a little bit of a kiss with that forward dividend yield of 1.2%. So again, big company. This is well over $100 billion market cap company. I still like it. I think it's doing everything right. And not only that, it continues to go up with these big money signals. And that is the hallmark of how I try to find the best growth stocks out there. So again, let's go ahead and get into number two. Number two is going to be a well-known name, especially to MAPsignals, especially to me, and that's Adobe. Big software company, been around since 1982, 22,000 full-time employees. They've got a lot of stuff that's really cool. Acrobat Reader, Photoshop, Dreamweaver. Sorry about that. Share price is $5.15. As you can see, 1 month performance is just over 10%. 1 year performance is almost 50%. And then their 3 year performance is 132%. But the real story, my friends, and I can't wait till we have a little hover over chart, which we're going to have pretty soon. But look at all of the big money signals. I mean, that is just that is the stairway to heaven, my friends. And this is a phenomenal, phenomenal company. And that is the hallmark of what great growth stocks do. They just attract big money. Big money likes to pile into companies that are just crushing life. Don't you want to invest in a company like that? I know I do. 3 year sales growth rate is plus 21%. 3 year earnings growth rate is just about 50%. So if you don't know Adobe, you should. The big money definitely knows Adobe, and that's all that I need to know. So let's go ahead and get back to number three. Number three is Crocs. There might be a few of you out there with a few of their clogs. I mean, just this company has been around. I remember when I was sitting on the trading desk and this company was just firing on all cylinders. I mean, it was a growth stock back then. It's a growth stock right now. Anyway, let's get into it. Founded in 1999, casual footwear. They also do some accessories, stuff like that. But basically, it's the shoes. That's what people, know about. Crocs. They have 4,600 employees. Discretionary company. Share price right around $85. 1 year performance is 258%. Their 3 years, 426%. I mean, guys, look at this. There's not much that you need to know. I mean, this thing was sub 10. Now we're over $80. Okay. Stock's got somewhere to be. And that's up. 3 year sales growth rate plus 10%. They did have a little bit of a hickey here. As I was looking, this is, FactSet said their earnings growth rate was negative 585%. There's probably a couple little things that were going on there, some accounting issues. But again, no dividend yield, but I mean, if you're going to climb your way, to heaven, you're going to take the stairs, might as well wear some Crocs. So let's go ahead, get to number 4. Number 4 is going to be a name that I've known this is one of those that got away. I invested in it years ago, sold out of it. Don't do that. I should have held it, and we'll see why. They're a home furnishing retailer, headquartered California, 4,500 full-time employees. The cool thing about Restoration Hardware, RH, is they just make high quality products, beds, chests, dressers. They just last a long time. They cost a pretty penny, but you know what? You're paying for quality. But whenever you pay for quality, it tends to attract, good prices, and good prices tend to be reflected into the stock, right? Because if they're doing great products, then they're going to be probably growing as a company. And that is exactly what they've been doing. So 1-year performance, 375% return, 3-year, 676%. But look, a few years ago, this is sub $100. This thing is well north of 600. In fact, 679 bucks. I think when I sold it, it was sub 100. Don't be like me. 3-year sales growth rate plus 5%, 5.3%. 3-year earnings growth rate, it's almost 2,900%. Obviously, that is just because it was on a low basis, but that is the type of profile that we're looking for. Those are the best types of growth stocks right now. And especially right now, whenever you have discretionary stocks just going to the moon, you can see how quick these things can get into high gear. Let's go ahead and finish it off with the number 5 stock. This is a healthcare stock. Healthcare is kind of coming back, especially the instruments companies. This is one, Repligen. It's been around since 1981. They got about 1,100 full-time employees, but this stock has just been crushing it. So share price is right at 222 bucks. 1-year performance, 85%. 3-year performance, 476% return. And you can see why. I mean, it was sub 50. And then all of a sudden it started to get a lot of that big money love. And that's what we want to see. Those are the types of companies that tend to be the outliers, the best of the best. And then look at these numbers. You want to shock somebody? Go tell them about these numbers. 3-year sales growth rate plus 37.39%. 3-year earnings growth rate plus 41.8%. So again, these are the companies. I mean, they are doing well. Accenture, Adobe, Crocs, Restoration Hardware, and Repligen. I don't own any of these stocks. Wish I did, but they are amazing, amazing companies. And this is what it's all about. It's all about identifying companies, growing their sales, growing their earnings. And most importantly, they've got that big money buying into shares. So again, leave me a comment. What are some of your favorite growth stocks that are out there? I'll see you next month.